Hi guys, welcome to Modern Wall Street Trader Talk. And if you're following earnings season, of course, duh, you know that this week is the busiest one for the season. 189 S&P companies are reported. However, right now on the floor, it's a little quiet and stocks are down today. But we have Peter Tuchman from QMS who just told me something very interesting, that they deserve to be in red today. Peter, can you elaborate on that? And welcome, my friend.
Thanks. You know what? Look, the market has hit record highs every week, every month, every quarter since the beginning of the year. The market blew right through 23,000. Right, these thresholds of 1,000-point moves have been usually levels where markets will peak, will pause, will contract a little bit, consolidate, and basically for the short sellers will be a point where they're hoping that there'll be a top, and we've not seen that every 1,000 points since 18,000. We once again at 23, we blew right through it. That was fueled by yesterday. So we had Cat Tractor, Triple M, American Express, I think Home Depot, and J.P. Morgan blowing right through 100. I mean, J.P. Morgan blew right through 100, went up to 101 and change. So the spiders caught up with the rally in the Dow because those are all Dow stocks, right? They were up significantly, right? So even though we're seeing a little bit of weakness in healthcare, which may be dragging the market down a lot today, yesterday was all green. Yesterday was a record breakthrough, 23,000. So the market, at some point we're going to, look, we may end up today. Look, we've seen 100-point sell-offs, you and I, at 10:30, 11 o'clock on any given Wednesday. But we've not seen it close that way, right? You know what? Look, at 23,500, which is where we're knocking on that door, which is unbelievable, right? We're getting 1,000-point moves in 6 weeks to 8 weeks. We're getting 500-point moves in 2 to 3 days, right? Earnings are on fire. It's a strong season. So you know what? We got to give the market a little bit of a break. We're seeing some red. That's okay. There's nothing wrong with that.
Now, and you make a good point. Earnings season is on fire. However, the stakes weren't very high. Is that as all concern to you? I mean, we had double-digit growth the past quarters, and this one I think it's just 3%, and it looks like consensus is thinking that's not even going to hit that. So, do you find any caution, any problem with that?
Look, I don't really know. I'm not going to make a judgment on that. I think that these stocks are acting. They're just so strong. You're seeing stocks. Look, when they love them, they love them. When they hate them, they hate them. Chipotle today, right? Missed. It's had a lot of hair on its bra. It's had a lot of hair on it lately. It's had a lot of hair on it lately. That's pretty funny.
Hopefully not in the queso.
No, not in the quesadillo. But it's down 50 points. So, and then we saw Cat, Triple M, and IBM the week before up $10. So, as I said, when they love them, they love them. When they hate them, they hate them. So there is, the buyers are rigorous and the sellers are rigorous. We're going to see both of that. Today, down 100 points in a market that's up 5,500 points is insignificant. Growth, good earnings, low interest rates.
I understand reflation, et cetera, but global growth, why is that so important for our stock market?
You know what? I think that we've got a lot of stocks with a lot of global exposure, okay? As I always say, I'm not an economist, but my understanding is that it does have some bearing on us. Cat Tractor has always been, when it's had positive earnings, a lot of it's been about overseas growth. I think it's a sense of confidence that we're not the only ones who are growing. Okay, I mean we have a lot of dysfunctionality going on in Washington. There's potential for a global crisis, right? So if we're seeing global growth, that's a good thing. All our economies are really interconnected in a lot of ways, whether it's corporately or geopolitically or whatnot. You know what I mean?
I know what
we could be in a. Look, we've had a couple of months here where we've seen North Korea problems. We've seen incredible, biblical disasters relative to hurricanes and whatnot and floods and earthquakes. And, the world is interconnected in a big way. So if the world seems some kind of stability, even though Washington seems unstable and corporate earnings are good and the interest rates are low, things are going to grow. If they grow, we grow. We saw that a couple of years ago when we saw, the things in Spain going a little awry, or there was some economic problems going on in Greece, our market was reflected in that in a negative way. So when we're rallying, and then the market around us is rallying in a big way, foundation, strength.
Now, this lackluster movement we're seeing in gold, is that attributed to us just pushing aside North Korea, or does that have something to do with this potential next Fed chair pick that Trump is weighing?
I don't know that story. I think it's important to look at the fact that we saw a couple of people yesterday, Mr. Waladid, or the Saudi billionaire, talking about oil. And look, oil's broke through 52. We've been in a 42 to 52 range for a while. That seems really strong. Okay, when the equities are up, there's the flight to safety trade, where equities are up and they sell gold. Right? We've seen a couple days where we did have the market break down due to some headlines that gold did rally back, but it's been under pressure as the market's been going up. That tends to be more times than not an inverse relationship. Right? Equities up, gold down, flight to safety. So for right now, market's up, gold's going to be a little bit weaker. If it has to do with the Fed, that's out of my realm of. I'm not that smart.
Oh, come on! You're New York Stock Exchange Einstein. We look up to you. Look at him.
I look like him, but I'm not that smart.
He is basking in his glory. All right, Peter. Thank you so much. Nice to see you on this Wednesday. Have a good one.
You too. See you soon.